Hey guys, it's Walker Deibel, founder of the Acquisition Lab, and I am here in St. Louis, Missouri. And when this video comes out, we're going to be in the midst of the first ever Buy Then Build Summit, where we just made some incredible announcements that we think are going to elevate and change the entire acquisition entrepreneurship industry forever. Okay, here's the first level of big news. Acquisition Lab has merged with Shareholder Ventures. Shareholder Ventures, if you don't know, is actually also announcing today is the largest fund in the acquisition entrepreneurship space. I happen to be sitting here right now with Tim Erickson, co-founder of Shareholder Ventures. Tim, how are you?
Walker. I'm doing great. How are you?
Good. So this merger is so exciting on a number of levels, right? And the first is that we're going to be able to provide capital. I mean, this is a very big, obvious thing to lab members and other people in the environment, in the ecosystem. But this is a much bigger story than that. You know, what's happened is that in 2018, when Buy Then Build came out, buying businesses was unknown, right? It was sort of like, how do we change how the world views this exercise, and so that it can fold into becoming a part of the entrepreneurship canon, right? I feel like that's sort of succeeded. It's been adopted, and what's happened over the last 7 years is this sort of like professionalization of the industry, right? And so as we've kind of gone from like this rogue, beating your own path, opaque, fragmented industry to now there's real players coming in. What we're trying to do with this merger is actually take it from, an elite accelerator to instead having elite access to different support at every single point of the search process. So whether that be discovering ETA, going through the accelerator, getting the community, doing the search process, analyzing deals, closing deals, getting investors, providing capital, post-close support, on and on and on and on, right? How do you want to start? Let's dig into this, right? Let's dig into this. There's so much to talk about. Let's do this. Start with your story.
Yeah, my story is that coming out of undergrad, I founded a venture capital backed business straight out of undergrad. Took me a really long time to get from that 0 to 1 phase where you're actually generating revenue, but ended up going through an accelerator called Techstars in Boston, and it completely changed my life. It put us on this trajectory where we ultimately ended up raising over $40 million in venture capital, growing it to hundreds of employees around the US, and ultimately selling the business in 2020. And so as I looked to figure out what I wanted to do next, I thought I should start another startup because that's what I know. I tried that, I failed, but during that time I was doing a little consulting. A friend of mine had bought a business. I was like, you can do this? And he literally handed me the Buy Then Build book, and I became obsessed, read everything about search, and then ultimately went through the Acquisition Lab.
Yeah. I remember you brought your deal to the search forum.
I did.
Yeah.
I did, yeah. Actually, I mean, 2 accelerators changed my life. I went through the Acquisition Lab, and I fully expected to spend 18 to 24 months searching, but I found a business that I ultimately ended up buying within 3 months of graduating the lab. And so bought that business, ran that for about 1.5 years. But during my time at the Acquisition Lab, I met really amazing acquisition entrepreneurs who were looking to buy businesses, obviously, but they had great operating backgrounds, but in my opinion, were buying businesses that were too small for them.
Yeah, right.
Simply because of what they had on their personal financial statements. And
Yeah.
so a partner of mine, Jordan, and I started putting our own capital into these deals to allow acquisition entrepreneurs to buy bigger businesses than they would on their own. And that's how Shareholder Ventures ended up being born.
It's also quite incredible because when you go back, to like in 2018, for example, if you were trying to raise money to buy an existing business, it was like pushing a rope. Like you couldn't get people to do it. And now everyone wants in. Everyone wants exposure to this whole new asset class because they kind of get it. It's amazing.
Absolutely. I mean, I relate this to what venture was like when I started in 2007. I mean, it's been around for a while, but it really didn't go through the professionalization until the next 20 years that we saw. And we, have seen a significant amount of capital go in there and tons of support. And search is going to go through that same thing, and we're right in the middle of it.
That's right. I think that it's also important for the audience to understand, like providing capital. There's sort of like 2 big key things, right? Like number one is there's a lot of people that have sort of moved into the space in this sort of fund format. And in my opinion, at the risk of sounding like I'm attacking somebody, like the point is like it's very important to me that it's an entrepreneur centric vehicle. And so the equity investment needs to be an entrepreneur centric structure, right? And I think that a lot of alternatives that have emerged out there don't do that very well. I think that there are investor-centric models. Shareholder Ventures has taken a very separate, different approach to that I really love. And the other thing that I think is important for the audience is like, in my original vision back in 2016, like this was going to be like a four-sided, kind of like platform with like all this different stuff, and capital was the next big piece. For exactly the reason you said, like, how do we elevate entrepreneurs who are competent from, hey, I can only buy $1 million business to like 6 million, like we can just make that happen, right? Theoretically, it's bigger, more money, less dependent on the owner,
safer, less customer concentration risk, all those big things. So.
There was two or three different times when I actually personally went out and tried to like hire to solve the capital raising piece of it. And what I learned was that you can't hire that piece out. I ultimately was going to have to do it myself. You need some kind of like, owner mindset, in order to do that. And so this was the solution for me, was seeing a lab member who had gone through Techstars, who saw, what we all see, who, partnered up with Jordan and basically raised the largest entrepreneur-centric fund in the space. Right, is really pretty awesome. Yeah, right. So, look, you might be wondering, what does this merger mean? Is Walker still involved? Is Chelsea still involved? And the answer is very much so. Okay, we're both venture partners at the Shareholder Ventures fund, and we are also investors in that fund as limited partners. And Chelsea and I are also joining the board of Shareholder Ventures. So we are very much involved. Nothing is changing in terms of our involvement with Acquisition Lab. And so really, when we say that this is a merger, that's really what it is, because we are elevating and expanding the reach and impact that the lab can have by merging together with Shareholder Ventures. Tim, I know that we have shared a vision for the last many months that we've been discussing it. Would you explain to the audience like how you categorize what it is that we're building here?
Yeah, so I mean, ultimately, we want to provide touch points along the entire searcher journey, from discovering ETA to getting the education they need to be able to go out and buy a business, all the way through to post-close support. And so we're calling it the 3 C's. Community, which is the acquisition lab and all the education that we're going to be providing this space. It's capital, which is both debt and equity, which we are supporting with our fund. And then what's collaboration, which is what we are doing with our post-close support with SMB Edge, where we help searchers and all the other things that they need after they ultimately buy this business. So as you think about the industry as a whole and how the searcher journey, we want to touch that with the 3 C's.
This is an entire ecosystem.
It's an entire ecosystem.
I mean, the other thing that, I guess we could mention here is there's other things that we're not doing directly that we've established partnerships with. And those are around, tech-enabled deal sourcing and also, tech-enabled brokerages. And as we see the professionalization of this industry, it's awesome to see that between us and our friends, we're able to really elevate the whole experience for everybody.
Absolutely. And we're not trying to do everything really well. I mean, for things that make sense for us to build or merge or buy, we're gonna do that. In other cases, it makes more sense to partner with really great service providers who live this all day long. But ultimately, we want to bring all of that stuff in one house so that a searcher can focus on buying and running a business versus everything else you need to do throughout the search journey.
Awesome. Let's talk a little bit about, probably the first thing that we did that kind of preempted this announcement was PACT, introducing PACT. Can you talk a little bit about what that is?
Yeah, one of the things that I realized investing in this space is that a lot of the acquisition entrepreneurs had no experience raising outside capital. Like I did in 2007 when I was raising venture capital, there's very little resources at that point on how these deals are structured, how to pitch investors, how the legal terms work for it. And then ultimately, Y Combinator, one of the largest or most well-known accelerators in the space, created what they call the SAFE, which made early stage investing super easy. Investors, entrepreneurs, lawyers, everybody knew what a SAFE was and how it was structured, and they provided educational content to help educate people on how to use it and what it means. And so coming into this space, we felt that this ETA was missing something like a SAFE. So we created PACT, which is the Partnership Acquisition Common Sense Terms. And it's a set of standard operating agreements, subscription agreements for acquisition deals using SBA funds with outside investors. And so in addition to creating this standard, we've also put up a website, etapact.com, where we educate acquisition entrepreneurs on what these terms mean.
One of the most exciting things that I think that we're getting ready to do is to announce the EIR program.
Yes.
Tim, what is the EIR program?
Yeah, so playing and taking another page out of the venture capital playbook, EIRs are entrepreneurs in residence, and big venture funds typically will basically pre-backed a entrepreneur who is going to start another business, and they spend time in the fund while they start scoping that out. And so we're looking to do something similar here in the ETA space. One of the other major problems that I saw going through the lab is that even if a searcher was able to go out and ultimately raise capital, they weren't necessarily taken serious by the business brokers because they hadn't raised that capital yet. But they couldn't raise the capital without the deal.
That's right.
And so our EIR program is really set up to fix that challenge, where we are going to take operators who have operated business before and have lots of really good experience who want to buy a business, and we're going to pre-commit to putting at least $250K into their acquisition as long as they buy a business using an SBA loan. And so we're backing them prior to them even starting their search, which gives them the credibility to be able to go and look at bigger businesses than they would on their own.
It's amazing. Now, we're expanding search support and we're expanding post-close support. For search support, we have not only PACT, but also analysts. And the analysts are available just to the EIRs at this time. Isn't that true?
Yeah, so we part of our acquisition, part of with the acquisition lab, we want to be able to expand the mentor and advisor network of the lab. We've been at the fund level, been hiring analysts to really help one-on-one, spend time looking at these deals, modeling it out, and all the things that you have to do before you're comfortable buying a business. And so we're investing in bringing that in-house for the EIR program.
And so now let's talk about post-close support. Yep. So, obviously we have been starting to, toe the line on the operator community, and that's starting to come together. So we're planning on expanding that. What else is going on? What else are we going to be bringing to market here?
Yeah, and this again sort of comes back to the venture capital analogy. When I went through Techstars in Boston in 2012, I mean, the program was amazing, and it really helped accelerate my path to go and raise venture capital to grow the business. But more importantly, it gave me a community of people who had actually raised venture capital and gone through this process before, and it connected me to a slew of services and service providers who could help me with everything from financials to insurance to everything that was needed to run that. And so we want to create that same thing here. We've created what we're calling SMB Edge. And SMB Edge is where all the post-close support services are housed. And today, we're starting with two things that I found extremely important in my acquisition of my first business, which is fractional CFO and accounting. This isn't bookkeeping. This is a true partner in your business who's helping you make strategic decisions, understanding the business better. And again, this comes from venture capital. I had a lot of money to be able to go and hire really great CFO talent who worked full time for me. Obviously, SMBs don't have that luxury, but I wanted a lot of those same dynamics to be able to make better decisions. And so created SMB Edge to really create that platform at SMB prices. And then second is hiring, both locally. You need to hire somebody at your shop, and also internationally to be able to expand your team and get access to top 1% talent around the world at, again, a significant discount over hiring somebody in the US.
Yeah. Listen, I think that, when you think about, what we've been doing at the lab over the course of the last 5 years, ultimately we tried to create an elite accelerator, and the vision was to always create the Y Combinator in the space. Okay. And so that, therefore, the reason that we have a vetted community is because we always let in people, we always extended invitations to people to enroll who were fully competent and able to do this. Right. And so ultimately at the lab, we have the highest member to acquisition ratio of any of the copycat programs out there, not by a little bit. We're absolutely crushing them. Our members have acquired almost $500 million, okay, in small deals, okay? What we're doing here, okay, is not only, with Acquisition Lab, we have created the largest vetted community of active, armed with cash buyers in the world, period. With this merger with Shareholder Ventures, what we're doing is we're arming them with even more capital. we're arming them with continued support in all different kinds of ways throughout the entire life cycle of the search, acquisition, and operating process. I think we're a step closer to realizing that Y Combinator goal. And Tim, I mean, this is such a unique time in history, frankly, to see all
amazing.
of this come together.
Amazing. I think that overall, this has been an absolutely amazing journey. I mean, being able to really go from learning about search to buying a business basically within 6 months, I felt the impact of the Acquisition Labs. I really appreciate you and Chelsea putting that together. It definitely changed my life. And we're super excited to bring this to the community and continue to iterate on this and really execute on this vision.
Thanks, Tim.
Thanks, Walker. Appreciate it.